Hi everyone, hope you're doing great. I've been on time off for the past few weeks, but hopefully we'll be able to get back on track and provide regular content again on what is going on in the markets and all that is transpiring in these volatile times. So in this video, I wanted to explain one of the key reasons why the stock market has dropped by about 17% so far year to date, and that has to do with the strengthening of the US dollar value against other currencies. As you can see, we are at a point that dollar has been at one of its strongest positions in decades. Now, just an example, see the US dollar exchange rate against euro, and this has been continuously increasing, becoming more strong. And that means that if you had euros, of course, at the start of the year, you could have got more dollars for it than you can now. Now, how does this affect the stock market? Now, as you can see year to date, during the same time that S&P 500 dropped by 17%, the dollar index has in fact increased by some 20%. Or so. So a strong dollar is one of the key reasons for this market sell-off. Now, you might think a strong US dollar should actually be good for the stock market and US economy for general. But it's a bit more complicated than that. And that is what I want to simply explain in this video. You see, like any other tradable asset, the strength of the dollar too will eventually come down to supply and demand. Now, as you're aware, during the COVID, the Federal Reserve printed so much money, and the interest rate, which is simply put, the price of borrowing money, was intentionally set lower to help people and businesses during that difficult times, during which many businesses were slowing down and many people got out of work, etc. Now, with all that money printing at that time, the money was basically made cheap. A lot of money supply basically. And so the dollar, like any other asset, when you have abundant amounts of it, becomes less valuable. Now, as a result, it took more dollars to buy anything, from groceries to stocks and everything. So hence the inflation issue. And so the Federal Reserve then decided to fight this inflation, right? Now, how do they do it? The main knob for the Federal Reserve for keeping inflation under control, as you know, is the interest rates. So now they had to do the reverse, meaning that they had to increase the interest rates so that it becomes more expensive to access money, loans, etc. And so since the dollar becomes more expensive to get, its value will increase. And this will discourage spending, basically draws money, out of circulation. Now, when the Fed raises the interest rate, the Treasury bond yields tend to raise too. And this means that because the return on investment in bonds increases, they become more appealing to the foreign investors, right? So then what does a foreign investor do to buy treasury bonds? Of course, they will sell their own country currency for the exchange to US dollar, right? This means the demand for US dollar goes up, and therefore the dollar again gains strength. Now, another reason why the dollar gains strength is basically global and political events. Now, a good example of it this year was Ukraine-Russia war at the start of the year, and also the China lockdowns. You see, when such events happen, investors try to keep their capital in relatively safe havens, such as dollar and treasury bonds. Again, higher demand for dollar made dollar stronger. Now, it is important to note that a strong dollar will hurt those US businesses that are multinational. Reason is that a lot of their products will be sold in foreign countries in foreign currencies, and of course when they exchange their foreign earnings for US dollar, they end up with less dollar amount. Not to mention that those products and services they provide will become more expensive to the foreign customer, and therefore the sales will drop, both hurting US-based multinational businesses. Therefore, at times that the US dollar is gaining strength, you may want to stay away from those businesses that have a high portion of their sales and business done overseas. Now, how do I see this in context of the current market conditions, and how we should think about our investments moving forward with these in mind? Well, you see, many of the companies in the S&P 500, including many mega caps like the likes of Apple and Tesla, etc., they do businesses all over the world, and these issues can potentially cause significant damage to their earnings. We saw this already this year happen to IBM, but I think this will also impact those mega caps such as Apple, which in 2021 reported that around 67% of their sales, their revenue, was generated outside of the US. This is huge. Now, this becomes even more interesting when you think about the fact that Apple alone has roughly about 7% of the S&P 500 weight. This could potentially have a dominoes effect in the US and world economy. These are the things that I'm personally watching for in the upcoming earnings season, especially for those mega caps with lots of huge foreign business. I hope this video was helpful. If so, please subscribe and give this a like. Let me know in the comment section what you think about the current market conditions. Thanks for watching and have a great day.